Everywhere you look today, AI is on the tip of everyone's tongue. No place more than Wall Street. But is this the beginning of a new economy or just the next bubble? Welcome to the Between the Lies podcast, your weekly lesson on how to approach an uncertain world with positivity and balance. I'm Nikki P, here with my good friends and money brains, Luke Tatum and Rob Brayton from Perfect Spiral Capital. Stick around till the end of the video for their free toolkit and be sure to like and subscribe if you enjoy the video. Gentlemen, are you outsourcing your investments to the whims of the machines yet?
Not just yet, although thank you for asking. Man, today we got a lot to talk about. So we have, and this is all over the news, I feel like at this point. There's some real big YouTube videos popping off talking about this. I was actually inspired to pitch this as an episode idea to Nick and Rob here by Patrick Boyle. Patrick Boyle is someone I don't necessarily keep up with, but he's got an AI or a video called "Is AI's Circular Financing Inflating a Bubble?" And there's some pretty compelling arguments in there that maybe it is. Although his ultimate conclusion is that maybe it's fine. These companies have good books, some of them. There's definitely a lot to pick apart and a lot of weakness that could, as they say, infect the rest of the financial system if people are not careful. So what do we do with that, Rob? I mean, what's your first take on this?
So I mean, trying to be positive about it, I think there's the potential for a lot of great upside. And I think that's where you see so much of the sort of the hope and the excitement and the emphasis is that we do see advantages for where AI can have a lot of great benefits for society. We certainly already are experiencing a lot of those, even on a day-to-day basis, even the average person. So like there's some good benefit there in a lot of potential to have it make a lot of people's lives easier. Obviously you have the doomsday type folks as well that are worried about Terminators and all that jazz, which
from large language models.
Maybe, I don't know, but I don't know. Like if you interact regularly with AI, we're nowhere near to that level, not even close. So I'm not too worried from that aspect, but I certainly see it why there's a big hype around it because it does have the potential to be really game changing. At the same time, the way it's taking place and the level of exposure that's existed out there in the market, that's where I see where people have some trepidation too, because if we get overexposed or you have something that does not go as expected, because a lot of these companies are kind of basing their revenue and all of their investment really stakes on this being successful. And if it doesn't go as expected, that could have large scale impacts to the broader economy as a whole at this point because of how infiltrated the AI boom is in a lot of different ways.
Well, so much of this feels like everyone sees the potential and maybe too much potential in this. Honestly, I think we're in a bigger danger of people relying too much on it and the bad code collapsing the economy. That's neither here nor there. But the issue being is I think everyone's trying to be the early adopters, and maybe to me it almost feels like people are trying to make up for sleeping on Bitcoin as long as they did, the way they're pouring money into AI, in that they don't want to miss out on the party, and so they're all trying to get involved in this. But the interrelated nature, like of how this functions, is definitely causing some concern. And Luke brought up a number before we even started today that will really make you scratch your head and go, okay, so we're waiting on a profitability that hasn't arisen yet, and the only way to even keep what we're imagining in the future going is going to take huge infrastructure changes, and it's a little it's definitely concerning to the layman like myself.
Yeah, I mean, so that number, just to kind of put a cap on that thought, OpenAI, which everyone just knows as ChatGPT, they have an operating loss for 2025 so far, the first half of 2025, of $7.8 billion, which is a lot of money to be in the red when we keep propping up the price of this company, when we keep going, oh, it's all going to be fine, guys. It's all going to work out. Don't worry about it. But they don't really have a model that has any definite promise of making a positive revenue like next year or the year after that. It's just like, trust me, bro. Let's build more data centers. Trust me, bro. Buy some more NVIDIA GPUs. Just trust me, bro. Like it's literally a trust me, bro model for for how we're funding all this.
I mean, we've already seen, the little bit of a scare that occurred a while back. I can't remember the name of the company off the top of my head, but the Chinese AI firm that, supposedly was going to do things for significantly less. And you saw the whole market kind of shudder because that might have meant maybe all this investment wasn't necessary.
DeepSeek?
And
we talking about DeepSeek?
Yeah, it was DeepSeek. Yeah.
Yep.
So you get to a point where, let's say somebody does come on the scene like that. Now what? If you're already 7.8 billion in the hole on an operating loss, and that's just one company, and now you have all these other companies, and then if we get into the topic that we're talking about today, they're all invested in one another in some way, shape, or form. That's where I think we have larger scale concerns. So, I don't know if we want to talk more about that in particular.
Well, it's easy. I mean, I'll just say it's easy to pick on ChatGPT, OpenAI, because of their operating loss and all those things. But like to the layman, you talk about AI, you're talking about ChatGPT. They don't care about DeepSeek. They don't care about Mistral. They don't care about, all these other things. They're not using Claude. It's just they're using ChatGPT as a therapist, and they're not paying for it, by the way, right? And so another stat I saw, about 5% of ChatGPT users are actually paying customers. It's mostly like organizational spending coming in. And, a lot of these people, of course, are buying ChatGPT services, compute power, and they are running a little ad agency, or they're running, they're trying to make money. They're trying to arbitrage their way into some, more money by paying for it. But we're burning up GPUs. You got to keep making all these graphics cards. it's just really weird. But you also have big players like Google and Microsoft and Meta and all these guys, and they're pouring tons of money in here. Venture capital over to Grok, right? And then Grok doesn't make any money, and then okay, what are we doing with that? Like XAI, all these companies, it's like, does it make any sense? Is there any money? If you dig far enough down, is there something that's actually a real tangible asset? I don't know. I mean, there are graphics cards, but they burn up in about 5 years. So I don't know.
A lot of servers.
You got to keep making them.
But we're talking about a service economy, and this is a service. The big issue is that, is this a for everyone service, or is it a niche service? Like, where is that going to shake out? And I think maybe a big part of the issue is that you have all of these companies fighting to be the do it all thing. Like, we want to do it all with AI. Everything's going to be fixed with AI. Now, anyone who's dealt with AI realizes that's not probably the best way of handling it, but because no one understands the future of where it's going to go, once again, they don't want to miss the bus. So they're trying to throw it at the wall, see what sticks, see where like the innovation needs to go, so that it can work in the future, can be a reliable industry. And this stuff's been around for how long that the public's even known about it, and even in that time frame, it has gotten how much better. So who's to say, how long does it take any industry to find its footing when it's a completely new industry? There's going to be a lot of things that get shaken out. Now, is that issue more complex because they're all kind of, it's like they're all hedging their bets on each other, and maybe that's the idea, is that they all know, look, one of us is going to make it, and as long as one of us makes it, like, all of us will have we're all invested in that one company that makes it.
It makes you think it does give you that feel. So I'm glad you bring that up, Nick, because it does, in some respects, really gives you that .com era vibe from the early, 2000, where a lot of these companies are, popping up all over the place, big valuations, no actual revenue stream that's been defined, but everybody's trying to get involved because they want to have a piece of the ones that make it. I mean, you look back to how many companies are still around, there's very few from that particular time. So it does have that feel, but I mean, that's what happens when it's new. And is that sort of mentality or that theme any different? Look how many car companies there were when automobiles first came out and how many are left. Like, it's not uncommon. Like, these things happen. It's part of new innovation. So I think from that angle, that I think it's a great point that you bring up. My concern, and I think where this ties into some of what we were talking about today, is how much of it is all based off of leverage to be invested into the company that you want. And that's where that even ties into our last episode about talking about leverage, where some of these companies don't have any money to begin with, and they're completely leveraged. And they're leveraged into investing into other companies in hopes that one of them or all of them manage to make it. And that's a dangerous house of cards.
Let's add to that how much of this is going to be, pushed by the government. How much are they trying to sneak into this game that we don't necessarily know about? And that's we all are of a mind that economies do what economies are going to do, and they break sometimes. The idea is to get the break to happen quickly and get it over with. And the issue you see is that you get the malinvestment and that propping things up longer than necessary. Like, are we wasting billions of dollars because some of these companies should have already folded and maybe they haven't because so and so knows so and so, and they're like, well, we're gonna invest in them so that they can't go down because I like the guy. Yeah, we don't know what that is. The other thing that is kind of, I guess, alarming to me is that how much of the market this actually makes up, and then like how much of these companies make up that are actually really kind of questionable. But then to be the first thing I think is well, until you open up the derivatives market, and much like what was at the top of housing, it was the fact that people started playing the derivatives on it, and it starts becoming this far more complicated thing that, like, sure, on the face of it, it's maybe it's just a momentary issue in the market and it'll fix itself, until you realize all of the investment that's really going on is happening in these casinos on whether or not it's going to work.
Right. It's like we're investing our money in who's going to win a basketball game or something. It's like, okay. I mean, there's not a thing. A basketball game is not a physical good. It doesn't have a value in and of itself. You can't later market it. It's just a live event. We're just speculating. We're just speculating on nothing, right? And so, we talked again pre-show about this graphic that I'm just going to kind of talk through real quick. I think we'll put it up on the screen here. It's a sort of a circular logic that is going into this, and so I'm just going to kind of read from it. But we've got AI tech suppliers that are developing AI models and infrastructure solutions. They require specialized computing power. They require the GPUs, all those graphics cards. When we're talking about millions of graphics cards, by the way, you want to wonder why graphics card prices are so high. Well, there's a lot of baked in demand. And those AI tech suppliers are also taking ownership stakes in these startup companies. And then we move into the funding and investment phase. And this could start anywhere, of course. But they're utilizing funding from the tech suppliers to raise capital from investors. AI infrastructure. You've got companies like CoreWeave, and they're building the data centers. And then the data centers, they expand the compute capacity. In other words, you're renting time from a graphics card when you're using these models, right? You're burning up a physical product when you're using these AI models. It's got to figure out the answer to your ridiculous question, right? Or make your AI video of a cat. It's just got to do that. You're burning up a physical depreciable asset by doing that. And you remember what a long time ago, it's kind of a sidebar. You remember a long time ago, we used to talk about digital assets, Bitcoin, things like that, as like, imagine you were just running your car all the time. It's just idling. And the idling of your car was solving complex computer, math problems. And somehow that made you money, right? It doesn't make any sense, right? And so in this kind of same sense, it doesn't really make a lot of sense. But it just kind of flows back into itself. We have this, hey, bro, I'll give you, I'm sorry to just keep doing the bro thing, but it's like, hey, I'll give you shares of my stock. I'm NVIDIA. I'm going to give you shares of my stock at 10 cents a piece if you'll do this. Oh, okay, no problem. We'll definitely do that. And then when they announce the deal, both companies' valuations go up. And then it's like, oh, cool. I'm going to sell my NVIDIA stock that I just made 70,000% on. And that's going to pay for the deal, right? That doesn't make any sense. There's very confusing.
Yeah. I was doing a little bit of research beforehand as well on this topic and just trying to get a rough idea of what the exposure in the broader market is from these companies. And best estimates at this point are, and granted that it's still a fairly broad range, but the conservative side is 20% all the way up to 50% of the S&P by market cap has meaningful exposure, meaning medium to high exposure to these AI companies. So that's a lot. I mean, that's a huge amount of one supposedly very solid sector, index. And if you were to have even a 15-20% correction in that sector, that's enough to bring the entire index down. Not for nothing, of course, but it would certainly be a massive impact.
Does it trigger a wider sell-off is the question,
yeah,
right?
And that's the bigger concern, right? And then that ties into what we talked about last week. And how many of these, no-defies that we had talked about are potentially invested or used to invest into these startup companies. I mean, we don't know how far that exposure goes, I want to level set and not be like, oh, well, I know all this stuff about how all these companies are invested, but we have experience to leverage from. We've seen these types of things happen before, and we know how much people are chasing return constantly. So it's not a far stretch to assume that it could happen or is happening.
When inflation is high, people chase returns more so than otherwise, right? They are panicked, especially institutional money, major net worth players, right? They're chasing high rates of return so they can combat the fact that the dollar is getting weaker, right? Or whatever currency we're talking about. And so we're just pulling out the stops, whatever crazy latest scheme we can get in on. How can I make money today and get out so that I don't have to see the downside later, right? Let somebody else hold the bag. Let the taxpayer hold the bag is what it's ultimately going to be, right? And it reminds me a lot because we have the White House buying precious metal, mining companies and Intel and all these things. Even the government itself is getting involved in trying to prop up these companies and participate in this runaway bull market in the AI sector. What does that tell you? It tells you that it's probably, at least partially, artificial, right? And so is this the railroad industry, right? Is this, man, let's just lay down as much railway as we possibly can, as fast as we possibly can, because the government's paying per mile, baby. Like that is what happened. Tens of thousands of miles of railway was laid that nobody needed. It was laid in stupid ways. It was like zigzaggy all over the place, up and down mountains, nonsense. And they later pulled it all back up. But the people who laid those rails got paid because the government's chasing it, right? And what do you think defense contractors are? You think a fighter jet actually costs as much as they say it costs? No, of course not. It's propped up by government demand. And so, what does the government want all this AI infrastructure for? I mean, that's not probably good either, right? I don't know.
Probably not at all.
Well, as the local tree hugger here, I do want to point out that the best solution that we have for a lot of the world's problems is the move towards nuclear energy. We should have made it in the 70s, and for a variety of reasons, people made that not happen. And there's a certain amount of forcing that technology to happen right now is, well, I see it good for the long term. The fighting over power that's going to happen, like your consumer electric bill is going to skyrocket at some point because of our inability between this and the forced green car initiative that we all have cross country. Like, it's going to be some serious problems that need addressed in the short term.
Yeah, hundreds of billions of dollars of data centers and all this stuff that's happening, right? And all of it takes electricity. You have in Memphis a XAI data center that's, it's not even on the grid. They're not waiting for hookups. They got money to make, baby. And so they are running generators and different stuff to just at any expense, because it's this race to the top mentality. It's, we got to get these GPUs online. We got to start selling our compute so we can get a return on our investment, so we can prove to our investors that we need an even higher valuation, so we can sell more stock, so we can do the next deal. I mean, that's what we're doing, right? And so they're polluting the air like crazy over there. They're not even waiting for permits to run all these generators, all this crazy stuff. It's like the government exists to protect you from this sort of stuff, but it doesn't. So now what, right? It's wild. It's a wild thing. And to your point, Nick, nuclear power, that's what we need. But the last nuclear power plant in the U.S. didn't come online. I think came online like last year, and I think that's right. Yeah. And we're not building one.
That's like, I think the runways that I've seen, even from like the building with all the crap in the way governmentally, you couldn't even break ground on one for the next 5 years in the best of scenarios.
Even if you fast track that sucker, I mean, okay, maybe best rosiest scenario 7 years or something, right, for completion. Even if you started today, not fast enough.
Well, unless there are people in the know who are trying to force it to happen sooner, perhaps by creating artificial demand. I don't know. It's anytime you get into some of this stuff, like maybe that's what the whole AI thing is really the demands to force us to build the infrastructure that we need for other things. I don't.
Yeah, maybe the next little add-on into that wheel is going to be nuclear power.
Well, I mean, the direction that we're going doesn't exist without it. Like, as Luke said.
I mean, you're right. I mean, there's so much energy being used. The stuff, it's not I mean, it's super efficient in terms of processing power, but when we're talking about actual usage, I mean, it's crazy the amount of energy that's used. It's unbelievable.
Don't worry about it, guys. Don't worry about it. We're gonna put some wind turbines over here, and it's gonna be fine. Okay, like don't don't question it. It's gonna be fine.
I guess the big question is, what is the positive angle to take on all of this? Do we take it back to the basics and say, invest in things that you know and understand?
Yeah,
and you're always gonna be making the right move.
And never lose money, right? Like
part of the issue with this is that nobody understands. Even the people invested in this industry have no idea what this is going to look like 10 years from now or how it's going to work culturally. So everyone's investing in this kind of blind and just hoping for the best. And as long as you're doing what we say as far as like only invest in stuff you don't understand, You're not going to get caught up in the, you know, sure, yeah, maybe you're going to lose out on some money, but that's only if let's just, you might as well say, well, every time I don't go and throw my money into the lottery, I'm losing out on money. Sure. But is it worth it?
Well, so I think what you have to look at is, OpenAI, they have, as of last year, a $4 billion line of credit. A whole bunch of banks came in and said, hey, we'll give you all this money. They have the option, I think, to add another $2 billion on top of that. Just line of credit. Sure, whatever. They're paying 6% on that money, I believe, roughly. And so they are just speculating and speculating and speculating. And if this is a huge house of cards, you could walk into that and say, I'm going to try to make some money before the whole bubble pops, right? But how many times has that worked out for people, right? Do you just know when you need to sell out? I think you go back to fundamentals and you say, I'm not going to participate in this. I'm not going to play healthcare sector stocks because we're in the middle of the pandemic and just hope that I know when to get out, right? I think you have to go, I'm going to invest in things I know and understand. I'm going to focus on what I can control and not try to play this casino. Do you feel like you are missing out on rates of return because you don't go to the casino every weekend? No, of course not. Because you might lose money. So why do you feel differently about investing in crazy speculative asset bubbles or stock market bubbles? Whatever, some kind of bubble. And so I think you focus on what you can control. You focus on something that isn't exposed to that. You know who's not buying a whole heck of a lot of AI stuff? Insurance companies, right? You park your money somewhere nice and safe. And when the opportunity does present itself for something like this, if you're well capitalized, if you got a ton of money, you want to risk some in the stock market of the S&P 500 or whatever. Guess what? Maybe you can. Maybe you should. But that's not where you start. You're chasing money. You need to control the basics. You need to control the banking function, where your money resides, how your money is deployed, those sorts of things. And so that's where we focus. What do you think, Rob?
There is something to making sure that when you are actually investing, you know what you're investing in. True investing is controlling as many variables as possible, knowing that this is likely to succeed. Otherwise, it does turn more into speculation. And when you are in control of the capital and you have the opportunity to do that, and at the same time simultaneously protect your downside in investing in the way we would probably recommend somebody to do, it puts you in a much better position. You're the one who's in control. When I think about all of this situation, and we've brought up rates of return a few times in this episode. When you think about it, if you had all the money that you needed by the time you hit your passive income time, and I'm saying you pick a number out of the air and you say, this is the number I'd want to hit. And if you had that, would the rate of return matter of how you got there? And for most people, the answer is no. The rate of return doesn't matter because I'm at what I need in order to make things work. So don't worry so much about what the rate of return is and focus instead on how you actually get to where you want to go. And that's a lot of what we do. We focus on that foundational aspect of how someone gets there. And with the proper foundations in place, we can then help somebody get to those areas that they want to be invested in or attain to. There's lots of different ways to do it. That's why the infinite banking concept is infinite. So there are so many ways to make it happen. So I'll kick it over to you, Luke, to kind of bring us out. But I think that just kind of ties into a lot of what you were talking about too.
Absolutely. No. And this has been great. What a privilege, you guys. I love doing these episodes with you. And it's so fun. So for you, the listeners, thank you so much for tuning in and spending some of your valuable time with us. This has been the Between the Eyes podcast. If you watch this full episode, I know you're interested in the future of money. We've got a free toolkit to help you demystify the future of your money. We've got 2 full free video courses and a copy of my book, which is all available to you for your email address. So head on over to perfectspiralcapital.com/podcast, or just click the link in the description and grab that toolkit today. We'll talk to you soon.